the chart analysis. So all we're going to do is I'm just going to go through the strategy again. I'm going to explain to you guys how the strategy works just for another time, so that everybody, and if there's any questions at the end, please feel free to ask how it works and how the strategy is, how everything functions together. I did share 2 videos on the group. So there is one with how to set up the indicators, and the other one I shared to help you to set up your charts and how to get started, and also the recording. So I'm going to show you 2 things tonight. I'm going to show you the strategy. I'm going to show you how to calculate your position for every trade. And then I'm also going to show you which trades we are looking at for this week. Okay, so let's jump away. Okay, let's see here. Okay, what trades do we have? Okay, so on the Euro USD, let me just switch off this one. Okay, so let's so from the Euro USD side, we've had a bit of an interesting take on the Euro USD. So let me just have a look on my phone. So we did have that nice break up, which we took a long trade, but obviously we were not in profit. I just want to see the positions that we have on the charts here. All right, so let me just have a look here on mine. Okay, so on Euro USD, we had a take at about 1.112. So it was run about here. Yeah, run about here somewhere where we took a buy. Obviously, that buy turned against us. So that meant that somewhere here, let me just make this a bit darker. I want to make this one a bit thicker so you guys can see it, because it is a very important, this is the most important moving average of them all. All right, so the 8 EMA. All right, so it looks to me like here we had, okay, so we took a position up there, and then where did we, Euro USD, so we only have okay, so we took another down position at 109. So I've got about 4 trades open on Euro USD. We are mostly long, and I think it was because of this. I know I took a position here, and I took another position here as a buy. So we had a buy up here. It was this one that we had a buy here. So let's just have a look here. On Euro USD, we had a buy here on this one. I remember we had a buy here. Then we got into another buy here at the bottom. And then we had another buy that came in because we had the 200 moving average that was coming in. So as you guys can see right now, it is fighting the 200. It's squeezing between the 200, the 8 EMA. So we have this, the NFP coming out on Friday. So the likelihood that the price will go up, I doubt it, because interest rates were hiked last week for the dollar. So I think we might see a bit more downside on this. So what is the next, what's going to happen now? So as you guys can see here on Euro USD. So rule number 1 is we open a trade on the second candle that opens below or above the 8 EMA. So that's rule number 1. So rule number 1, we haven't met yet because we've got only one candle. This is the breakthrough candle. This is the first candle that has opened under the 8 EMA. So we're going to look to another candle. And rule number 2 is we never trade anywhere closer than 10 pips to the 200-day moving average. And the reason being that is because that is an extremely strong level for the bank. And the bank always looks at this moving average when they make a decision in which way to push the price. So for right now here, I am just going to be observing. I'm not going to take any new positions until I see a clear-cut direction. So as you can see, we had a breakthrough here, but we had a pushback all the way back up again. So on Euro USD for now, we are holding. We'll most probably hold during the night and see what happens tomorrow. That's why I haven't updated anybody on the group about this currency pair, because it ain't going nowhere. It's literally just hovering there in the middle of nowhere. Hey Werner, yes, you got a question?
Yes, I just want to ask, if you look at your last candle, that red candle, no?
Yes.
You you can't see where's the opening for that candle, or can you? Because the top point is the maximum for that 4 hour on time slot, and the bottom point will be your lowest. But you can't see um, where the opening was and the closing was, or whether it's possible to be able to see it.
Are you talking about this red candle?
Yeah, because what happened is when I look, the reason why I'm asking is, uh, let's say for instance, let's go back to that long green candle.
Yes. This one.
Um, yes. So if you look at that green, no, just two, three, four candles back,
This
yeah,
one.
that long candle right before.
This one.
If you look at that green candle, and that might have opened just on top of the white line,
Yes.
but 4 hours later, the second green candle also opened on top of the green
Okay.
line. Would have that been a bought? Because now, if you look back in what happened, it wouldn't have been a buy. But if you just started looking for 10 minutes in the 4 hour time slot, the first 10 minutes of the 4 hour time slot, it would have might have been a bought.
Okay, so yeah, this is a very good question. I'm actually glad that you're asking this, Werner, because it's very important. So when you look at your 8 EMA, remember, although the 8 EMA is still a lagging indicator, right? So your moving averages can't really predict what's going to happen in price movement. They only react to it. So here was your low point, right? On the close of this candle. That's why it is very important to never take a trade until the candle closes. I don't care how your emotions feel. I don't care what's going on in the market. You do not touch it when until that candle is closed. I have made that mistake where I've opened up trades before the candle is closed and I regretted it, and it took me 2 weeks to get out of that position because I didn't wait. So wait for the candle to close like here, and then you know, okay, this is what's happening in the market. So this is the bottom part of it. So what I normally do whenever I see something like this happening, exactly what you're talking about, Werner, is I will literally just take a line. So what I would do is, let me just quickly get out of. I will literally take a line, and I will say, okay, let me see, where was the moving average? The moving average was right there. So that was the closing of this candle and the opening of this candle. Because you see price pushed up, it pushed back down, and it closed there. Then this candle pushed down, pushed all the way to the top here, pushed back, and closed right there. Which if you see the line here, you'll see it did close above the 8 EMA, and that means the next candle would also be above the 8 EMA. So this is the breakthrough candle. This is the first candle that opened. This is the second. So you would have taken a position right here. And I think we did take a position right there if I check my charts. Yes, we did take a buy. Yes, at 1.1. Yes, I have a buy at 1.1 here. So we took a buy exactly at 1.1 there. And the reason why I took the buy is because the price was pushing away from the 200. So it was because you had this candle that broke through the 200, this one here. So you had this candle that broke through the 200. Then you had this candle that formed. It was also green, and it gave me an indication that price is going to push further up, right? But then on Friday we had that beautiful news about the dollar, the interest rate, where they raised it by 0.25%, and it did this. So this is news. I always say whenever there's news and price does this, the chances that it will continue or it will reverse is very, very good. That you might have a continuation of trend because the dollar is fairly weak at this point, and we'll see what happens. So yes, Werner, you would have taken. So this is your breakthrough candle. Just put a line there. I normally just take any color. So I normally take like a light color, and then I will just check and say, okay, is that where it kind of like, okay, that's where it is. It's not an exact science, guys. So it always comes down to my interpretation, your interpretation of it. So the way I just do it is I just plot a line like right there, like on that, so I can see, okay, I can't see the 8 EMA. So that was the closing price right there on this candle. And that means that this candle opened above it, or the pushed through. First candle that opened, second candle that opened. So I would have taken the trade here towards the upside.
Okay, so
Okay,
after the second candle closed, that's when you do the trade.
that's it. Yes. All right.
Awesome. Thank
So
you.
we did take, okay, so we have a formation here that happened here. So we've got 3 candles here. We're going to see what happens at the 200. The great part about this is really cool. Do you see it's like right on the 200? So if you want to just understand price a little bit better, go back down to, and there you can you guys see why price is doing it? Why price is not really going anywhere? Because it literally is getting squeezed by the moving averages. So, like I said to you guys, remember the 200-day moving average on the 4-hour is the 100-day on the 1 hour. So they represent the same time frame. So you can see here that price is squeezing between all of these. So at this point, if it breaks, if the 50 does break, we are going to see some more downwards. We don't trade on the 1 hour. We never trade on it. You can if you want, but we in the group, I only trade on the 4 hours. So, but it gives me an understanding on why price is not getting that traction that I wanted to get. So what is going to happen? So we have a trade right here. We took a trade right here. Right there. Boom. I took a trade there. I entered a position. I saw it pulling away. It is further than 10 pips away from the 100-day moving average. As you can see, the 100-day is coming to pull in. So what is the likelihood? Price might break down. So here's my first candle, breakthrough candle. So this candle might push down. And if it does push down away from it, I will hedge this position, right? So I will take a trade in the opposite direction for the same amount of lot as this one. And I will take a trade towards the downside. And if it keeps going down, I'll keep in the position until the 8 EMA turns. And it brings it back. Because here, just look at this. Here, we had this position where price broke here. It broke up. This was the first candle, the breakthrough candle, first candle that opened, second candle that opened. So we literally took the trade right here on the opening of that candle. And we scooped. Look at the price we scooped here. This is almost about 200 pips that we scooped here on this trade. So I'm not complaining at all. This was a nice profit margin. It pushed a nice profit into my account that I'm able to trade right now. So that's why some you win, some you lose. The ones that you are wrong about, we hedge them until price comes back and tells us what it wants to do. So that's scenario 1. Scenario 2, right now it might break lightly through, push back up. And the reason why I do believe that we are looking most probably at a retracement is if you do go to the 1-day chart, you will see, let me just reset my chart here, you will see that we are still in an uptrend, right? So these are all of the things you will learn over time. Is you will see here, we're still in an uptrend right here. We have not broken the uptrend. Check there. We're still in an uptrend. So we haven't broken that trend yet. We had another strong rejection point off here. So I always say, look at your 1-day, but we trade on the 4-hour. So we just want to see what's direction like in the 1-day. And on the 1-day, the direction is still in the upwards motion. It's still going up. So what do we do on the 4-hour? We observe price. So here, the likelihood that it's going to break through here, maybe do a slight breakthrough, come back up, that's most probably going to be the most likely scenario. Or we might just get a complete breakdown, because if you look back on the chart, you will see that this has always been like a very strong zone for the Euro USD, where the Euro gets in when it falls here. So let's see. I mean, again, I said we don't predict price. We simply look at what price is doing and we react to it. All right. Okay, so this is my analysis on Euro USD. Is there any other currency pairs that you guys have been looking at that you would maybe want me to quickly analyze and just give you some take on that? I know, Werner, you've been trading Fanya, you've been trading lekker. Huh, Fanya?
Very much, very much. Was exciting today. I'm still excited.
So yeah, Fanya has been following the strategy with me very carefully, and she actually hit a nice blue streak now. Most of her trades are going in her direction. The only one that she's still a bit stuck in is in the Euro USD. But like I just explained, we'll see which way it goes. I can't tell you which way it goes. All I'm going to say to you is, if you keep trading the strategy, don't give up on the strategy. The moment that you see, things are going in the opposite, don't give up on it. Guys, the strategy works. Trust me, it works. Our the $100 account that we started with the challenge, right, this morning, last week wasn't such a great week. We didn't have so many trades. But from a month perspective, we are still, let's have a look here. On a month perspective, we have still made over 100 and profit. Where's our profit? We've made $104. So the account started with $100. It is now on $104. So it means that we've doubled our money in 2 months. So in 2 months, we've doubled our money. Now just think for yourself, if you can keep doubling your money, 100 to 200, 200 to 400, 400, if you keep doing that, then where are you going to sit in 12 months? Where are you going to sit in 5 years' time? By doing the same strategy. And the better you get at it, like us now, where we look at price a bit more objectively, where we look at different time frames, you get a better understanding of what will happen, and the emotions will die down. I think that's the important part, is those emotions needs to die down. Okay, and that's why you need to keep trading. So is there any currency pairs, Werner, any on your side you want to have a look at?
No, I set everything up the way we spoke the other day. I'm just really struggling on my cell phone. The screen is so small. So yeah, so I'm trying, if I can't see, if I can get it on my computer, to get it just to be able to see what I'm looking at.
Okay. So what you do, just download MetaTrader 4 and just log in with your account details on your portal. You can do that as well on the phone. Have you got an Apple or have you got a Microsoft?
Microsoft.
Then you're fine. Apple MetaTrader 4, you can't have it anymore. So just download it and put it on.
Because when I touch with my finger, sometimes I touch too many stuff, and then the screen is just a little bit too small. So.
Okay, no, cool beans. But also watch on the group. That's why there's been no trades called, because markets is not giving us anything. And until I can truly say to you, okay, we've got direction now. The other thing that I want to know from you guys, Werner, and you guys must tell me, Fanya, we will be going in on Friday. So we're going to take a nice little trade on the NFP on Friday. So I think that's also going to be really cool, because it's pretty much the awesome part about the NFP is if you do decide to trade it, it's really awesome, because you just come in, you take a trade, you know that the direction is going to be in a specific direction, and you get to bag a quickly 20, 30 pips, get out of the market, you did a nice little bit of profit. I do not suggest that you guys play around with your lot volume. Keep your lot volume the same. Don't play around with it. Trust me, you're going to bust your account if you play too much with it, because most of these guys on the NFP, they take 7 times the lot size, and then they get triggered in a buy and a sell, and then they end up blowing their accounts. So the only difference with the NFP is it's a quick trade that you get to take. You're going to get some nice pips, get in, get out of the market, and it's some extra moolah just before the weekend.
What is the NFP?
Non-farm payroll. So that is a huge event for currencies, especially the US dollar. So that's where America announces how powerful their economy is. So that NFP can literally, I just want to see where the previous candle for the NFP was. 10 July, somewhere here, one of these candles, these big candles was, I don't think you're going to see it on the 4 hour because it's not as big, but on the 15-minute chart, it's like this huge candle, like massive candle that the NFP does. So it's nice to learn how to trade it. But we don't trade news, but in general, if you can bag an extra 20, 30 pips, why not? Why not on a Friday? So, okay, so as you guys can see, it is pushing up now. Now, okay, let's just have a look. Let's do another couple of currency pairs. So here we've got the Euro JPY. Okay, so the other one I actually want to do is I want to do gold. And I'll show you guys why I want to do gold. So gold it flows exactly the same as the euro USD. So look at the chart. You see down, up, right? Gold does pretty much similar. So you'll see it goes down, up, down, up. It does very similar. The only difference is gold is a little bit more volatile, so you get nicer swings. So on the euro, you see it's a bit more smoother. On the gold, it's like strict, like you got that volume going, so you can scoop a lot on it. I just want you guys to check your lot volume before you guys start trading gold. Okay. But on gold, right now we had a huge break towards. Okay, so this is a good one, Werner. This is now an awesome example again of is the candle above or below the 8 EMA. So again, what I would do is right here, you see there. So I will take a line. I never do it just by my eye. I go then I say, okay, this is the close of that candle. So did this candle close above the 8 EMA? No, it didn't. Because that's exactly where the candle closed. And this one, you'll see I'm right on top of that line. I can't even really see. I can see a little bit of green. But this I will not consider a close above the 8 EMA. I will not. This I will consider a close because on this close here. So if you put another line in here, you will see that this one did close because you can clearly see it's got a bit of body. But this is like a little, it's highly debatable, this one. So I would always say revert to the negative part and say, nope, rather find reasons not to take the trade than to find reasons to take it. Because if you find reasons to take it, it means you're being biased. So you are not, you need to stay unbiased in the market. So I would have said, nope, this is not an entry candle. So this is my first candle that just opened. This is my doji. We know rule number 3 is we close all trades on a doji. So if we're going in an uptrend like here, if we were doing an uptrend here and we saw this doji, we would close all of our positions because a doji is a very good indicator of market reversal. And I will challenge you to show you that it is, right? So look at this. Right here, reversal. Right here, massive reversal. Right here, price came down. Okay, but this is on a downtrend. So a doji is, it's not as powerful on a downwards movement as it is in an upwards movement. But again, price came down, blum, 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 blum. Here we had our first doji. So you guys can see right here, price literally reversed around this zone. And then price came back up. So dojis, and the more dojis you get in alignment, the more it's telling you, hey, it's like an orange light saying to you, hey, be careful, we are losing momentum here, maybe you should start protecting yourself. Okay, hey?
Dojis are opening and closing its proximity on the same point.
Yes, so the smaller the body, the more powerful the doji. So if the doji sits right in the middle, like in the center of the candle, and it's like skinny, like a little line, that is like this. This is a powerful doji. This is like a seriously powerful doji. This one is also, these two are very powerful. This one is a little bit less powerful, but the body must never be a square. So let me look for a square. Where's the square? So normally we will not take these as dojis. We will take them as spinning tops. Although they are a bit like, they're still rectangle. We don't take them as powerful, but this is definitely a spinning top. This. So it's got more of a square shape than it is a rectangular shape. So again, it comes down to interpretation, guys. For me personally, but when I see dojis like this, and the longer the wicks, the more powerful the doji is. So if it's got like a very long body and it's like very thin, you got to know that price is going to reverse. So yeah, like on this doji, you had an uptrend. You had this doji, so you got out on this doji. And then price did a bit of a swing here. And then you're like, okay, maybe the price, it did break up, but I'm not really seeing any movement. And then here it went all the way up again. But look at this. And then the next moment, it fell all the way down. So yes, a doji is just a way for us to protect our capital. We protect our capital when we see a doji. So you can see that gold is full of dojis. Like it's like massively. That's why I don't let you guys start on gold, because if you go to Euro USD, you'll see that there's not as many oh, this one's also got a lot of dojis. Okay, but this is at the top. So but more towards the downside, it hasn't got so many. So you can see, if you see a doji on this, you can see, okay, price is going to revert in the opposite direction. And obviously the color also determines. Like if you got a downtrend and it's red, hey, it just gives you an indication that it's more powerful. If it was green, not less powerful, but still it has the same effect. Like, yeah, I mean, you have a downtrend, bum, and then you get hit by this doji. Okay, you say, okay, let me see how far price is going to go. Let's see if price is going to hold on the 100. It came here, made another doji by the 100, came down and pushed all the way back, pushed up. So you can see that, you know, your dojis tend to give you an indication of what price is going to do. It's not, we don't use it in isolation. Like this doji, this is a powerful doji. Big body, long wicks, and it's got a square body. It's not very thin, but this is a strong reversal. And you can see right from this doji, price just kept going up and up and up. So it's not, you cannot trade it in isolation, but it's just a way for us to take, wow, just look at this motion. Like from this doji, woo, you know, it went all the way up. This was a nice scoop. And you had price staying all the way above the ATMA. So this is beautiful. This is like your best trades when you get these. You're like, oh. All right, but that's so much on that. But now I want to talk to you guys about lot volume, because I think lot volume is extremely important. Now, for some odd reason, I think when people learn about lot volume, I actually want to take off my indicators so I can show you guys. So when it comes to lot volume, a lot of people think that lot volume is, okay, I have a $100 account, so I just use this lot volume because most of the traders out there will say to you, okay, you are using, or you've got a $100 account, so you should be using this type of lot volume, right? So they'll say to you, okay, if it's $100, use a lot volume of 0.01, right? I beg to differ. Because we as professional traders, we do not work out our positions like that. We don't swing our positions to say, oh well, we actually work it down to the T, because trading somewhat is also about mathematicals equations. So what we do is we use what we call a position size calculator. What does it look like? It looks like this. So let's say we are going to be taking, so you can my FX book, the one that I shared with you guys, you can download it. This is the computer version. You can download it on your phone, so you can check it out on your phone. It is your best friend, right? Your position size calculator is very, very important, and I'll tell you why. Because not every currency pair has the same power. Meaning, if you trade Euro USD and you trade NZD like this, you will see that the lot size that you use. So just look at this. This one I was working out today when I traded. Yes? Yes, Werner? Can you see me? Can you guys see my screen? Just give me a thumbs up there.
Yes, we can.
Thank you. Okay, so on the position size calculator, what you need to do is whenever you take a trade, so we are trading, so I just want you guys to take a look at this, right? So I was taking a trade on NZD JPY. My base currency is USD. Now, when it goes to ZAR, things completely change. Like, look at this. Same position size, same account size. I'm only allowed to take a lot volume of 0.02. Right? So now you think, okay, well, I've got 10,000 Rand in my account, so why don't I just trade the lot size as any, as a $10,000 account? You can't, because the capital that you have, the currencies needs to get converted. There's so many, you can't just say, well, I'm just going to wing it. Well, that's why you wing it, and then you shoot your account in the foot, and then it leaks all the money out the bottom. So you need to understand a position size calculator. So let's take our euro pair, right? So, base currency is the dollar USD. So we were trading EUR USD, right? So you would put in euro USD. Now, let's say your account size is $100. Just like you guys. You guys have $100 account, right? Now you're looking at a risk to reward ratio of 1%. So on your account, I would suggest if you haven't been trading for a while, you're a new trader, you stay on 1% until you get comfortable with the strategy. Month 2, month 3.
Are you guys still there?
Hello, can you see us, Werner?
No.
Hello.
Yes, Werner, we're there.
I think it's maybe your internet. I don't know if it's because mine's still fine. Okay, so let me stop share and share my screen again. Can you see me now, Werner? Yes. Can you see us?
Now I can see you. Yeah.
Cool. Okay, because this is very important. I want you guys to clearly understand this. All right, so can you see the position size calculator, Werner? I think Werner's internet is on and off. Okay, so what you would then do is whatever currency pair, and I want to show you guys this. Look at Euro USD. Same size, same everything. 1% ratio. So risk ratio is 1%. Like right now, where I'm trading on my account, I'm trading on a 3% risk to reward ratio, right? So it's very important to know what you are trading, how you are trading, right? Now, stop losses. On average, our market moves about 100 pips, right? So we are normally when we hedge, we're about 100 to 200 pips. So let's say we get in the middle, 150 pips, right? That's normally where we've got to hedge and take an opposite trade. So we want that play in our account of 150 pips, right? And now we calculate. Do you see that on a regular account? So if you had any normal account except the cent account, you would be bust. You would have lost your entire account because it says to you, you cannot be doing that. But as we know, we don't trade. You see, we don't trade normal lots. Like one lot is 100,000 units. Remember, we're on a cent account. So that means that we are 0.1. You see that this one doesn't even put it in there for us. So 0.1, there's no way it's going to put in. Oh, there it goes. Yay. It's going to do it. All right. So there we are. So we as a cent account, that's why I get you guys onto a cent account, is because when you take a trade on $100, your trading size in lots is not that. You see, because for one lot, it equals $1. That's why I put you into a cent account, because one lot, right? So one lot is equal to 10 cents on your cent account. So it's reduced the risk significantly for you. All right. So look at this. If you hedge this trade right now, so let's say you do take the trade and you do it and it does 150 pips and you hedge, the only money that would be locked up in your account is $1. So that means you need to literally take 200 bad trades to bust your account. And statistically, even if you are the worst person at following strategies, you will not be able to do that. And that's why I put you on a cent account, because it helps you to learn. It's also an account where you can make mistakes, because I make a shucks load of mistakes. Sometimes I even just press the wrong button and then I'm into a position and I got to get out of it. And so we all make mistakes, and a cent account is your best friend. When you get bigger, like now, I will only upgrade you from a cent account to a normal account when you've got $1,000. Why? Because when we take that same trade, do you see that we use the same lot volume? We use the exact same lot volume. Okay, so how are you going to be using this calculator? All right, very simple. What they've done in the cent account is once you deposit money into the cent account, they don't put it as $100, they put it as 10,000 cents. Okay, So the reason why they do that is so that you can still use all of these calculators without having to work out. So what you do is you would say, okay, I've got 10,000 cents. That's $100. I want my risk ratio to be 1. My stop loss is 150 pips. My trade start calculated. So as you can see on the Euro USD, you can go all the way up to a 0.07 lot. But Marnie is full of crap and she doesn't want you guys to throw money away while you're learning. That's why I say start on a 0.01, right? So as you can see, I'm trading at 3% on the $100 account. So I'm sitting at a 0.2 lot. So that means that right now that lot volume of mine is so I can lock up, it won't be $300, but it's $30 that I can lock into my account because I have a different risk to reward ratio. So how do you work out this? It's very simple. Because you've got a cent account, like you got 1,000, you need to take the comma 2 forwards to the normal account. So that means if the comma is there, 1, 2. So I will only be risking $3 in total on my account. I have $100. I'm risking $3 per trade. So when you've got a full hedge in, so although you've got a buy and a sell, you only locked $3 in, right? So that's the risk that you've taken. So that means on each of these currency pairs, you might have 10 trades going and you've only locked in $30 of your account. And I'm sorry, statistically, even if you are the worst trader in the world, you have a 50-50 ratio. Because anybody can look at something and say, okay, well, it looks like it's going to go further up. Let me take a trade. And then you take a trade. But now with the moving averages, we have put favor on our side. We're about 65 to 70% correct of the time. So out of every 10 trades or 100 trades we take, we know about 65 to 70 of them are going to go straight in our direction. The other ones we have to hedge. So we've put favor on our side. But let's run through this again. Now, I want you guys to look at this. Do you see this exact same trade, right? The exact same trade that you're going to be taking that you've worked out. Look if I go to any other currency pair. And this is so, so important to understand. Is let's say you go to gold. XAU. There is, where's my gold? There it is. Right? And you go and calculate. Okay, it's not going to give me on this size. So I need to, no, why don't you want to calculate for me? 10,000, one risk. Okay, do you, no, I don't have $100. Okay, so as you guys can see, let me reset it. Account size is 10,000 cents. I only want to risk one of my account. My stop loss is about 150 pips. Calculate. All right, so there you can see. Look at this. Do you see my lot volume is 0.07 on gold?
Change your currency.
Hey?
Your currency.
Which currency? Oh, did it go back to my... XAU. Where's gold? Now, gold is a whole different beast, right? Check here. On gold, it says I cannot even take these types of trades because my account is too low. So now you guys understand why I say to you, no, don't start on gold. You need to start on Euro USD because you cannot even risk 1% of your account. You're going to have to hedge a position at about 100 pips, I think. Yeah, you see, still it's saying to you, no, you cannot. You can only buy 100 because gold is different. The way, because it's measured in ounces, so the prices is different. That's why there's no way that you can just go in on any currency pair and say, oh, well, let me wing it. Okay, you don't wing it. Please promise me today you're not going to wing it. You're going to actually work it out and you're going to understand it. So let's say you go to another EUR pair. No, I want to use GBP. GB, let's like odd. Same position. 150 pips, right? 150 pips size. Look at that. Look at the lot here. So this is the exact same trade that I took on Euro USD. My lot was 0.01. But now, different currency pair, GBP odd 0.1 lot volume. I'm risking the same 1% of my account, same stop losses, same trading size, but it is different because there's an exchange rate. So here's what I want you guys to do is when you decide to move out of Euro USD, where we program everything for you, when you go to another currency pair, take this calculator and go and work it out. Because here's the great thing. Let's say now you've been trading for 2 months And like me, I took the $100 account, I made it now $200. So what happens with my next set of trades? This is what we call a compounding strategy. So I go back to my account and I say, okay, I'm doing Euro USD, right? So now I don't have $100 in my account anymore. I've got $200. And then you say, okay, calculate it out for me. Why is this one so sticky today? Let's quickly check it again. So my account is now 20,000 cents, still 1%, still 150 pips. Calculated for me. Do you see? 0.13 lots. Okay, so that's the new lot volume that you're going to be using in your account on the next set of trades. And then once you get to $300, you put in the 30,000 cents, and then it says to you 0.2. So this is a great way for you to keep adjusting your lot volume, and you still get better results. Now there's two ways for you to play with this, but you only do this once you know it. Is you can either go up in account size, or you can start playing with your risk. So you can still stay. Now you've got 20,000 cents, right? But you still stay on the 10,000 cents. You just bring your risk up to 2, calculate, and it's going to increase your lots the same as if it was a $200 account. The difference, so there's a risk, but never go above 5%, guys, please. For me, I don't even, the moment I get anywhere close to 5%, my heart is already going do, right? So I would not suggest you do it. Stay at a 1% risk to reward ratio, but your account should be perfectly right to trade up to 5%. So let's say you do decide at some point to trade at 5%, it means you're going to be trading at 0.33. So you want to know how I turned $100 into $200? Because right now my lot sizes on this account is 0.33. Although I've grown it to over $200, I have not adjusted my lot size yet. I'm still staying on the 0.33 until I get to $300. Then I will only do go back to my calculator and recalculate this. Okay, but please promise me that you will use this calculator, and you will not just blindly go in and say, okay, well, Marnie said, or this person said, or that person said that on $100, my lot volume must be 0.01. I just showed you if you had $100 on a normal account, not a cent account, you would be bust. If you cannot even move 150 pips, then your broker will call you and say, either deposit more money or we're going to bust your account. You don't have enough margin. You don't have enough equity to cover this trade. And then they will close the position, take all your money, and they will bust your account. Okay, so please, guys, don't just go in blindly when someone says to you, oh, well, you know what? It's not so bad. Increase your lot volume. It's not something to play with, because remember, we cannot manage the market. The market goes up and the market go down. What's the only thing that me and you can manage in trading is our risk management. That's the only thing that we've got control over. I'm telling you, the market might go up, it might go down. We don't know. We'll have to see tomorrow. So that's an uncertainty. But the only thing that I'm certain of is my risk tolerance. So if I manage my risk according to my trades, I will always be profitable. And this is why so many traders fail, is because it's not because they got a bad strategy, or because they don't know how to manage, or they don't know how to trade. They know how to trade, but they start fooling around with lot volumes. They don't size each of their trades. When I take different types of trades, I have different lot volumes. So for example, here, let me show you guys here, just an example of that is I'm busy trading on Ubuntu. I'm one of the signals traders there now, and I want to show you guys this. So not every position is the same. It can never be the same. So here I'm trading currently with Ubuntu. So look at this. I've got a different lot volume. Look here. Here my lot volume on NZD-JPY is 0.24, and my USD-JPY is 0.15. Same a trading account. Look at this. I'm risking the same amount. Same amount I'm risking when it comes to my drawdown. Look there. My estimated stop loss is at $95. This one is at 67 because this one I've got at 50 pips and this one I've got over 100 pips. So I'm risking the same amount with every single trade. I don't just blindly go into a trade and say, well, let me wing my lot volume. And that's where traders fail. I busted account. Me and my husband, we've busted many accounts because we had to learn lot volume. And the moment we started mastering our risk management and staying consistent with that, we started seeing a lot of profit. Because like I said, out of every 10 trades you take, statistically, you're going to have a 50-50 or a 60-40 ratio. Now, here's the reality is if you take 10 trades, 4 of them are good and 6 of them are bad. But your 6 trades that are bad, you only lost $1 each, which means you lost $6. But on the 4 trades that you took, you did $2 on each of them. You're $8 here and $6 here. You're $2 up. What did I do? I took the same trades. The only difference is I managed my risk. And that's where a profitable long-term trader comes in. We understand risk. The same thing for you today is you need to work out your lot volume. If you're going to go for anything outside Euro USD, by all means, you can go for it. I don't have a problem. Just make sure you measure your position. So go in there, put the parameters in and say, what is my risk volume or what's the volume I need to use at a 1% risk so that I know that I've got enough money to trade this account. Guys, trading is going to make you rich. I guarantee you that. If you master these skills, there's no illusion that you're going to become rich. Can't tell you when, but I will tell you, you will become rich. The only thing that I can tell you is you're not going to get rich quick. Because then you're going to be playing with your lot volume and then you're going to bust account after account. But if you do take all of these things and you apply it, I can guarantee you're going to become rich. Because they've worked for so many other people. Consistency, risk management equals huge success. But you've got to master these skills. All right, so I will share the position size calculator for you guys on the group. So go back, go check your position size, check what's going on, make sure that you understand how to work out your position. If you still don't understand it, I will also I'm shooting a video tomorrow where I will be doing a couple of positions where I will be trading on Ubuntu and I will also be taking up a couple of positions and I'll show you how I work out my trades. But these trades are with stop losses, but I will show you how the trades work out with a lot volume. How do you work out a successful lot volume every single time? And how you can then use lots to compound your account. All right, so you can use lots over a period of time. As your account gets stronger, you can actually use a lot volume to increase, still take the same risk, 1% risk, but you can adjust your lot volume as your account grows. So you can have clear-cut areas where you say, okay, if my account gets to 200, then I'm going to use this lot volume. If my account gets to 300, I'm going to use this lot volume. And that's how we are trying to grow this $100 account, because the moment that the $100 hits the $200 mark, the next set of trades we bring in with a stronger lot volume. Okay, guys, is there any questions on the lot volume?
Can you do it in Afrikaans?
I can probeer, but I don't think Fanya's going to understand.
It's not about the understand. You don't think Fanya will love it. That's what the point.
No.
Can we maybe do a private session tomorrow somewhere?
Of course, Werner. I'm available tomorrow. I'm just out on Thursday, but tomorrow, Wednesday, and Friday, I'm at home. Well,
okay, you can just send me a time. I'm open for the dates. You can just send me a time which will suit you.
Okay, cool beans. Let's make it for tomorrow at 11.
Excellent, thanks.
Okay, so let's I'll send you a link now for 11 o'clock so that we can quickly work that out for you. Okay, so is there any other questions on tonight? So from a market perspective, guys, Euro USD, it's still going in a direction.